Hello guys, welcome to yet another video, right? I'm Charles Vema. All of you know that, and I hate showing my face. I hate showing my face because I just hate my face being out there like that. But if you haven't subscribed to this channel, just click the subscribe button, yeah, and like the video, share, of course. Before I go deep into it, and sign up with Pepperstone. That's the best broker ever. There's a link in the description. Yeah, Pepperstone gives you amazing spreads, guys. Yeah, now today's video, I'm going to teach you how to break down the market, and we're not going to do a weekly review, yeah, but I'm going to teach you how to identify what position you are in the market to see what you're looking for. Yeah, of course at times you make mistakes, but at times when you're able to break it down, tell the story of the market, it becomes so easy. So I also always drop a few setups and progresses in our channel, so it's in the link in the description. Join our Telegram channel where you can be able to share your trades and all this stuff with a community of other traders. Now, without wasting much time, so many people think banks move the markets, right? But to me, I be like, banks play a role. Okay, the big major players play a role in moving this market, but there is an individual that is in charge of clearing liquidity or clearing transactions of the day. And to me, I believe these candlesticks are just a representation of what happened yesterday. You get? Now, for example, if it was that quick that someone buys and sells from a specific area, it would be so fast for everyone. Someone would easily manipulate the market. Of course, those moves are there, instant moves, right? But guess what? To me, the market is still running on a T+1 system. That's the world economy, T+1. It takes 1 day to clear a transaction. Some countries have a T+2. Those are 2 days to clear a transaction. Our Forex brokers have even a T+1, T+2, up to a T+6. Those are 6 days to clear a transaction. So you can't tell me. There are only few that have an instant clearance. You get? Now, if, let me say, the USD is trading with the JPY and a bank in the US is trading with a bank in Japan, that move can't be instant. It can't be a T+0. You get? It will be a T+1 or a T+2. And who is in the middle? Who is the middleman in charge of overseeing the risk between the two parties? It's what we call a clearance company. And if you integrate that clearance, I won't go deep into it because it's a strategy I'm about to introduce to the guys in the mentorship. But if you go deep into it, these people have clearancy hours, like the CLS group, the DTCC group. And most times it's always at the open of a session, let me say London session or New York session. And you always see huge volumes coming at around that time. Yeah, that is clearance of momentum. Transactions are being cleared at that specific time. That's why we see a lot of momentum coming into the market. So it's a strategy we shall introduce in the mentorship. But today, let's break down how you can easily know which position you are in the market. So I'm going to use a random chart, like let's just get a USD JPY. Okay, okay, let's just do, let's go random. Let me say GBP cards. I'm going to add a few pairs, and let's say let's just go to the forex side of it, and I say OGUSD. No, let's see, I want to just okay, NZD USD. Now this is GBP JPY. You're supposed to know how each currency is performing. If it was GBP JPY, I would know that the Chinese New Year, okay, around that side, Japan, China, are just concluded or have just concluded their New Year celebrations. This year is the year of the dragon for guys who are born in 2000, right? So they've just concluded their celebrations for the New Year. So the JPY is not kind of all that stable. You're supposed to know these things because, of course, a trader is supposed to be updated. But guess what? This is the British pound and the Canadian dollar. First, you're supposed to identify that these are two economies trading or fluctuating between each other. When you click buy on the chart, it means you're buying shares of that economy and saying in the next few minutes it will be greater than the other economy. So you sell back those shares in the market and you'll be able to make a profit. But guess what? Now look at this market, right? On the daily time frame, we can see that the market is playing around at a resistance point. I don't want to go too far into the left because these are so many days. How many days are these? Let's first see. Okay, these are over 215 days. That is too far. You get? That is too far. Those are over, let's say, 6 months. That is too far for a prediction of the market. But of course, higher time frames hold a lot of water. You get when you're analyzing. So knowing where we are in the market, we can see that the market, this is a high that it left up here. And you can see that this high held a lot of water. If you to push to the left, this high held a lot of more water. And you can see that this high did form a new high. And you're seeing you have an engulfing to the downside. That's on the daily time frame. So we are looking at the market trying to change, but it's still forming higher lows. You get? It's still forming higher lows, meaning on the daily we can see to it that it breaks this. That's when you shall say that okay, the trend has changed a lot, but right now it's still an uptrend on the daily. You can decide to use tools like trend lines. Trend lines do work, guys. It just depends on how you're able to use it. You can see that this third touch would have given us a new buying opportunity. So knowing that we're in an uptrend but we are waiting for retracement, we can see that the market, let me just try to zoom out. Now I like the 4-hour time frame because it gives me a current picture. I always use it for a main trend that's on GBPUSD. But you can see that this market, what is it doing? Try to zoom out and see the overall picture. What is the market doing? It's giving that kind of pattern. You get? It's not breaking above this area, but it's also forming lower lows. I mean higher lows. You get? So meaning you're still looking for buys. But you can see that we had that move to the upside, to the downside. Then to clear out all this liquidity, we had that retracement. So you try to pull up a Fibonacci from here to here, to down to this low, and try to find out why the market stopped here. Now this is the story you're telling. You get? Try to find out why it stopped there, and you can see that okay, it stopped, it played around on the 78.6. Now we want to look for a divergence here. This is the story you're telling. You're just breaking it down, right? Now if you're able to find that a divergence was there, okay, there's no divergence. Let's see. Okay, there's no divergence. So this market just changed up. But on lower time frames, we can't find reasons why. Let me just see if there is, just confirm something. Is there a divergence here? Still, there wasn't a divergence on the 4-hour time frame. Now, what would have caused this market to turn? Let's see another reason why. Let's see. There was no order block too. There's no order block. So the market just turned all over from here. But if you break it down, let me see on the 1-hour time frame, you may find an order block, a 1-hour order block. Now you can see that this market just came, formed a W pattern on that trend. Okay, this was the third touch, this was the second touch, this was the third touch, and this is the fourth touch. That's on the 4-hour time frame. Now look at this pump. Now still you want to see that this market is forming something like a cup and handle, right? This can be the cup, then the handle, then the downside. Let's see. Let's just see that too. Where's my brush? Alright. I'll show you guys something. I'll draw an arc. Alright. I'll draw an arc to try to give me that the reason why it bought from here. You get? Now this would be my arc. You get? So I would say the market spinning around that arc. So if I literally bought from here, I would be looking for buys to the upside. But still I'm seeing another form of arc. Now this is what I always do when I'm analyzing GBPUSD. I look for the same market movements. You can see that we have that nice arc in there, and you can see that if it did that arc and bought, we can see to it that it starts shorting from right above that arc, short a little bit and go to the upside. So right now we are just trading a retracement. You get? So it can form this, do that, and go to the upside. It's very possible. The market is full of possibilities, probabilities. So right now I'll just be looking for retracement here to the upside. So if I delete that arc, remember I'm just analyzing, I can see that okay, this market was going up, it's trying to change from here. It's like giving us much more bigger candles to the downside. I go to the 1 hour time frame. Now I'm breaking it down. I know that I'm looking for sells, but short-term sells, since the overall trend is the buy. Now this market can still retrace to the upside. It's very possible. It's very possible. But we are saying it's giving us that M pattern with an engulfing. Now, we can see that it's playing around on an order block here. You get, there's that down order block there. So what am I going to be looking for? I'm going to be looking for reasons why this market would continue going down. You get, I can see that okay, this is possible. Yeah, I can see that okay, if I use this point A, point B, and a point C as giving me reasons for this market to come here and bounce, you get, because there's an order block here. There is a very big order block, but still I'm not going to take the buy. It will be a short-term buy, but I'm looking for reasons why I would sell this market. So if it bounces, it comes and gives us reasons why, we can also look for what we call a psychological zone, which is slightly down here, but it means this market would have already broken here. So what I'm going to do is just be patient and see the reaction here. So if it gives us a much better price up here, I'll be shorting this market. You get, but still, if it breaks this trend line, retests it, this order block becomes invalidated. Yeah, so it depends on exactly how we are going to trade it. Yeah, so basically this market, I'll just be looking to watch what it's going to do next, maybe from around this zone, because I'm saying there are reasons why it would continue, would have a solid retracement. But let's look for the reason why it started selling from here, and you can see that okay, there we have the 50% retracement area, gives us an M for the sell. So it's very possible that this sell can happen, but it can't just happen like that. We may first get the bounce, then we get more orders for the sell. So this market is still a sell for me. Yeah, I'll be looking for it to continue and see the reaction of it. Yeah, so let's get another one, NZD-USD. Let's see the overall picture on the daily. Now on the daily, it's a jumbled kind of thing, but you can see that this market was still going down. You get, it was still going down. This is a downtrend still, but it's playing around from one area, just this area around here, from this high. Yeah, from this high to slightly down here. It hasn't broken around here, but this is the daily. This is too far. So what am I looking for? I'm looking for the position that I'm in. Yeah, so right now I'm looking at okay, I'm in a position where this market is kind of trying to sell, but it may be also resting on a Fibonacci retracement area for it to continue buys. The only time I would call it a buy is when it breaks above this area that it created. Yeah, you can see that okay, it was shorting here, but once it broke above this, this can be a retracement. It's very possible. This can be, and if you see to the left, it can be forming that funny head and shoulders pattern. This funny head and shoulders pattern here. So here it would be so advanced for the buy. You get, it will be so advanced for the buy, and you can see that okay, if we pull up that tool that we used, where is it, our arc, and make it start from here. I don't know why it always draws like that. All right, you can see that our funny arc is there, and you may be expecting more bias to the upside. Yeah, so literally I'll be looking for what the 4 hour time frame is telling me. So let me zoom out and see what the 4 hour time frame is telling me. So I can see that, okay, I entered it. So I'm currently at the shoulder, overhead and shoulders pattern, meaning I'll be looking for buys, but I have to be so careful because I don't know what this market is doing yet, but I would see to it that it's buying. But of course, if you're trading lower time frames, you may first get that up move, then a down move, then the buy starts. You're supposed to be extremely careful because this is the 4 time frame. So we can see that this market was relatively also going downwards. You get, it was going downwards here, formed an equal high, then a low that didn't break, meaning it changed from exactly when it broke this zone. When it broke that zone, this may be coming back to clear out, then to continue to the upside. So we have to be extremely careful with this market. Now, what am I going to do? The same arc can work here. It's very possible it can work, yeah, but it's not a sure deal that it's supposed to happen. It's a probability, guys. Sorry, it's a probability. By probability is that it changed character from here, then it broke back in and it's looking for buys to upside. And I can, if I'm able to find a divergence right here, I'll be looking at more confirmations, and you can see that, okay, we have that strong divergence from down here. You can see that these lines are crossing each other for the buy. So mostly Monday I don't trade, but I have to be preparing for Tuesday because I like to start my trades on Tuesday. Yeah, so I'll be looking for buys on this pair. That is main trend. Let's look for the current trend. Why did the market stop here? Let's see. Okay, if I pull it from here to here, consider this is a 78.6. Now, after identifying that, I'm going to be looking for reasons why I should buy from here. Do I have a divergence? Let's see that. I've not used our strategy. There's a strong divergence here that would make me buy. So I've not used anything like a mentorship strategy at all. I'm just breaking down the market. So what am I going to do? 1 hour time frame, I'm going to just wait for it to break this area like that, to break above, give me a retest for the buy, and that's when I'll begin adjusting and putting my trend lines. And another reason is this is a strong order block here, so once it breaks that order block, I'll be looking for buys. But still, this market can just do this. It has the chances that it can't continue down to retest this area, then start buying again. It's very possible. So you have to be extremely careful. So let's analyze also GBPUSD. Let's see what it's going to be doing this week. The last one, GBPUSD. So 4 hour, yeah, can see that, okay, this market, what was it doing before? It was going to the upside and it's still going to the upside. It still shows that it's going to the upside. So wavers, of course, can find waves in here. Let me say wave 1, wave 2, wave 3, wave 4, wave 5, you get. But I don't do waves. I just try to find where the market is. I can see that this area looks like a Fibonacci called 61.8 or 50 area. Pull a fib from here to here. You can see that it's the 61.8 area playing around there. So where did they break out? The market ranged a little bit, and this shows that, okay, it was looking for volumes, it was waiting for momentum. So this may be a retracement back. We're going to see that on the 4 time frame for the sell. Now, of course, we have a strategy in the mentorship that shows us a trend for the week. So let's just break it down. 4 time frame, what is it doing? If I have this sell, was this a retracement? Sorry, my dogs are out. If you hear noise. So market taps into the 61.8 and drops, but it didn't finish here. So if I stretch this to the left, you can see that it just came and played around the 61.8 and broke this low. This is a break. So I expect it to continue selling, guys. I expect it to continue selling, though there is a strong trend line from the upside running through. I have a strong trend line running through like that. This is point B, point C. This is a touch, so it was a fake out, then a point D. So that's why the momentum came for this market start selling. And we also have that break above what we call a channel out. We have that breakout of what we call a channel. So this was news that flashed to the downside, but guys, GBPUSD always comes back to where the wick begins from. It came back where to where the wick, this is exactly the area where the wick began from. So I'll be looking for that retest. This is a pullback for more shorts. Yeah, so it's really amazing how it's going to reward us again. Yeah, so here it's a very good, we have that change that happened here, pull back. Okay, this is also a change here, the breakout, then also this is a change. So I'll be looking for it to break this and pull back in again. It's going to just repeat the same pattern. If it happened, it broke here, pulled back in, broke here slightly, pulled back in, and again broke back here slightly. So we're expecting it to break this and pull back in. So what am I going to be to identify that? I'm going to determine what area it's pulling back to. Okay, this area. It's pulling back to the 78.2. Let's confirm that. Oh, broke this, pull back in 78.2. Okay, broke back. If this gives us 78.2, we shall be looking for the same. Okay, 78.6, pull back in. So we are going to look for the break. Now let me just confirm one more thing. It didn't come back. All right, so I thought it would give us an area where it was retesting down here. It would make it much more easier. Yeah, but this is Monday, so Monday we may have that sluggish movement, then they break to the downside and a pullback in. So we're going to wait and see how this market is going to perform. So right now my trend line, where would my trend line begin from? It would begin from here to get to the downside, or it can take this in. This market can flash up to around here and drop. So guys, sorry for making this video too long, but I hope you gained value. Subscribe to this channel, guys, to push this channel to many other people. Like the video, and see you on the next video. Have a great trading week. Yeah.